This week in the parish of Bourses and market structure, ICE bond clear approved, Nasdaq wins OSE, ICE excels, CQG sells, and NSE looks to coal. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 332. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest's daily subscriber newsletter, the unique guide to the Bourse business sent daily to your inbox. More details at exchangeinvest.com. In bit carnage, shocking news as Gemini withdraw from several jurisdictions, this coming barely a year or two after the Winklevi was Hector lecturing the then US administration that Europe was the future. Of course, BitCarnage, Exchange Invest, and indeed this podcast was swift to disabuse you of how nonsensical this was. If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. Amidst our top stories this week, ICE have received SEC approval for their Treasury clearinghouse. It's a great leap forward as the DTCC comes under pressure from another angle. Meanwhile, also looking into fixed income, Hong Kong exchanges profiled in the South China Morning Post discussing their fixed income foray. And it's the future, as we've noted for a very, very long time. The RMB yield curve trade becomes a vast driver for Hong Kong exchanges in cash and even more excitingly derivatives markets. More on big fixed income markets in a moment. Meanwhile, Nasdaq are mulling new fast entry roles ahead of big IPOs like SpaceX. CQG, itself the subject of a management buyout in 2023, is selling to Broadridge, with which it's been cooperating for years. A handy payoff for the CQG management who exacted that buyout in November 2023. And clearly, Broadridge will now scale up their end-to-end execution approach to ETD. A remarkable journey for CQG from that original market profile-centric two-screen terminal that so many of us deployed to trade profitably in the 1990s. Back in the bond markets, and also in their embrace, is NSE, the National Stock Exchange of India, which has had another good week. The bond market is no longer a nice-to-have, it's a financing necessity, noted CEO Ashish Chauhan, as IPO progress is beginning to crank up after the recent SEBI nod. Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or if you have time, a positive review will always be welcome, wherever you find this podcast. Meanwhile, NSE India is moving to establish a coal exchange, albeit with the possibly confusing title of Indian Coal Exchange. Think about the acronym. And of course, the bigger picture in coal markets demonstrates that perhaps net zero in small nations like the UK is less than coherently sensible. In results, it was not just a busy week, it was a frantic week with results in the parish. All the details were in Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, let's look at two edited highlights, Intercontinental and CME at the top of the pyramid from the USA, both reporting excellent numbers, strong single-digit Q4 growth and very strong 2025 net income of 21.5% and 15.5% respectively. Of course, earlier in the quarter, we had another set of fabulous results from the USA, courtesy of Nasdaq, which brings us elegantly to our Nasdaq-sponsored segment. Welcome to a Nasdaq-sponsored segment. Investor appetite for Asia is rising, but post-trade friction is holding markets back. In the new Nasdaq and Value Exchange study, 25% of participants plan to grow exposure, yet 46% face artificial trading limits. The biggest pain point? Corporate actions. 60% report high error rates and 39% of platforms are still legacy. The fix is clear. Harmonize rules, standardize workflows, modernize technology in order to unlock efficiencies in settlement and corporate actions. For exchange leaders ready to scale, download Creating Asia's post-trade operating model of tomorrow at bit.ly, that's bit.ly/APAC APAC-post-trade. That's APAC-post-trade, all one word, at bit.ly. Meanwhile, if you fancy some financial insights with moving pictures, check out our live stream Tuesdays 5 o'clock London time, midday New York time. It's the IPO Video Live Show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. Now online is IPO-VID 200, all about the roaring 20s, with Anne Berg and Dan Davis of EP3 Connemara joining the panel. Coming next week, we've got a splendid discussion all the way from Sims to floors and back again into the world of electronic trading. Product news this week, Nodal Exchange, they've announced the launch of Power Daily Futures contracts, while Thailand's TFEX have widened daily price limits for gold and silver futures amid fairly unprecedented volatility in recent days. SEBI, alas, looks likely to extend its ban on many agricultural futures, and ASX has announced a collaboration with Bloomberg Indices to launch ASX Bloomberg OSE Bond Index Futures. Finally, in a busy week for product development, Egypt is considering sugar trading on Commodities Exchange to boost the transparency and price stability. That is, of course, on the new Egyptian Commodities Exchange, which is about to be launched. Technology news this week. Spectacular story. Japan's Osaka Exchange have adopted Nasdaq Eclipse as the trading and surveillance technology for their next-generation derivatives platform. It's a welcome expansion for Nasdaq with the installation of Eclipse at OSE. Nasdaq will be ebullient after a strong vermiculous challenge failed to deliver the Swedish upstart their first execution venue client. Over in Pakistan, well, there's a little bit of a shock. February the 9th, Pakistan moved their stock and bond settlement to T+1, vastly ahead of the UK and EU's ability to move from T+2 to T+1, which has still got some months to run. NSDL, the Indian settlement platform, they had a glitch which stalled trading settlement for several investors last week. And that brings us elegantly to career paths, where the big news is the replacement for Joe Longo. Sarah Court is the new chairman of ASIC. Over in Big World, a key Chinese export hub, Yiwu, home to a vast array of products, particularly trinkets, has weathered the Trump tariff storm particularly well. According to the South China Morning Post, the city's imports and exports surpassed 700 billion yuan, which is $99 billion in the first 10 months of 2025, a year-on-year increase of 25.2% and more than the total recorded for the whole of 2024. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast number 332. Join us daily via exchangeinvest.com, or if you have a new exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of Bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.